Hello everyone, and welcome to another episode of Daily Gwei Refuel, where I cap the latest news in the Ethereum ecosystem. I'm your host, and this is time notes as the 3rd of February 2025. Alright everyone, let's get into it. So what a interesting 48 hours in crypto. Obviously, we're all aware by now that the crypto markets did not react kindly to this kind of Trump trade war that's going on right now in the US, and I'm not sure when you'll be watching this, but apparently today Trump has a call with Canada and Mexico where he's going to try and strike some kind of deal with these tariffs. I don't know what's going to happen with that. I have no idea what impact that's going to have on the market or anything like that, but I am going to talk more about the market stuff at the end of the episode because I feel like this is one of those episodes where I have to talk about it given what has transpired and things like that. So I'll talk about that towards the end of the episode here. But before I do that, and for the first part of the episode, I want to talk about the fundamental stuff going on in the ecosystem right now, and a perfect way to do that is to go over this thread that I actually put together for the Ethereum Twitter account here. So this was published last week. I think I teased this on the Refuel, maybe, that I was putting out a thread here. So this went live last Friday here, and it was basically just a thread of everything that had happened in the Ethereum ecosystem in the 2 weeks prior. And I got a lot of praise for this thread. A lot of people really enjoyed the thread because it was highlighting things that they may not have been aware of. But honestly, if you listen or watch the Refuel, you were already aware of all of this stuff because I pulled a lot of it from the Refuel. But it was good to get another platform like the Ethereum Twitter account to broadcast this out much further than my own account can on Twitter, and obviously much further than the Refuel can here. So what's going to happen going forward with the Ethereum Twitter account, at least for the foreseeable future, is that they're running these experiments where they let community members post via the account in that true decentralized fashion that Ethereum is trying to embody. Because people kept saying, Sassano should just get control of the whole account. He should be the one posting on there, so on and so forth. And while I appreciate the vote of confidence, I don't think that I should be the one posting on there all the time. I don't think I should be the one in total control of it. I do think it should be a team of people. There is a team of people on it, and I'm in contact with that team, and I give them feedback when I think it's relevant. But in terms of who posts threads over time, I think it should be definitely different people from the community. And I even floated the idea by the team saying, hey, why don't we just have my thread go out, and then people can even pull from my thread, and we can have Hayden Adams do a guest thread on Uniswap V4, for example, or we could have Justin Drake do a guest thread on based and native rollups. And I think that would go much further than me just doing tweets and stuff like that, because obviously I wouldn't be the best person to tweet about based and native rollups because I don't work on them. I don't understand them as well as someone like Justin Drake does. And obviously Hayden Adams, the founder of Uniswap, understands Uni V4 a lot more than pretty much anyone else out there. So he would be the best person to get on to do that. So you could think of it as like a podcast, but in tweet thread form, essentially. Obviously Hayden and Justin go on podcasts, and others in the community go on podcasts to talk about their thing. But this would be a concise Twitter thread put together and then broadcast from the Ethereum account. And it's not just them. The goal is to have as many people as possible do this. And I think that's just a better way of doing it, especially because the person has their name attached to this as well. So the goal was to make sure that people knew who was writing this thread, which is why it's basically at the top of the thread here that I wrote this one, and then get more spotlight on what they're doing, on what they're working on, and really elevate a lot of projects in the ecosystem in the maximally impactful way. Because if the Ethereum account just tweets about projects, that's cool. That's better than what it's been doing in the past, obviously. But giving a platform to people directly involved with that project to actually talk about that project in their own language and to a huge community, because the Ethereum Twitter account has 3.6 million followers, and obviously a lot of people have notifications on for that account too, so that would be the best use of the account. And I agree with that. I totally agree with that. So I'm hoping that I get to do another thread at some point in the future, but I am the one who did the first thread here as part of this initiative, so I was honored to get that opportunity there, but I can't wait to see who else they bring on to do more threads here. Alright, as you guys know, Roman Storm is currently fighting a case in the US over his involvement with Tornado Cash here, and he was raising money in order to fight this case. He needed about $2 million, which he now has. He said here, massive thanks to the Paradigm team, which donated the other day, Vitalik, Jesse Powell, and everyone else who contributed, and believes in the freedom of software development. Because it's not just his case that he's fighting for the freedom of software development in the US, the freedom of open source software in the US. So he's now got $2 million to do that. That may sound like a lot of money, guys, but believe me, legal fees eat that up very, very quickly, especially in a case like this, which is is ridiculous, the fact that he has to raise this amount of money just to defend himself in court. But when you're going up against the US government, obviously they have an unlimited budget, right? They have the money printer, they can do whatever they want, and it's a big kind of case here. And as I said, it's not just the case for Roman, but it's not just for Tornado Cash, but it's a case for all open source software. So good luck to him on his case. I'm glad that he's got the money now to fight it, and I'm sure if he needs more, people will step up and donate here, because even though the market crashed today, there's still so much money in crypto, guys. People have money. I guess bigger players in the ecosystem, like the exchanges, for example, always have money because they're the ones selling the shovels, and they're making money no matter what the market does. Obviously, they want the market to grow and go up more than go down, but they're still making money when the market goes down. Like days like today, where it was super volatile, or I should say yesterday, they make a lot of money. So they're definitely, hopefully, stepping up here as well as time goes on. All right, speaking of Uniswap Uniswap v4 has now been deployed to all of the major networks here. So it's live on Ethereum mainnet, a bunch of L2s, the Polygon POS chain, and a couple of other L1s like BNB chain and Avalanche here. So you can go give it a whirl if you want to use it. I did highlight Uniswap v4 in my Twitter thread here as the first project I was highlighting. You guys remember when I first talked about it, they introduced something called hooks, which basically brings customization to Uniswap. So you can do things such as limit orders, custom oracles, dynamic fees, and others there. And that's a huge unlock for Uniswap, because V1 to 3 doesn't have that. V3 was a pretty big unlock, but V4 is even bigger here. And they've also lowered the gas fees on a lot of things as well. You can see here that pools on V4 are expected to be 99.99% cheaper to create, and swappers can expect significant savings on multi-hop swaps. Plus, native ETH support adds significant savings for ETH pairs, so you no longer need to deal with wrapped ETH, because they're just doing it with native ETH here, among all the other features that they've got, of course. You can go check out Uniswap v4 for yourself. I'll link this thread in the YouTube description below. But speaking of v4, there was also another project that launched called Flaunch. Now, this is a project that had to wait until Uniswap v4 went live to launch, but they're essentially a project on Base right now. I think they're going to go to other networks, but they're essentially like a pump.fun on Base, but they've got a few unique features that make them distinctly different. One of the biggest features is that 100% of the trading fees goes back to the creators and buybacks of the token. So you can go to the Flaunch website, as you can see here, and then in the top right, click Flaunch a coin. And this is how easy it is to actually create a coin here. So you can put in like the ticker, the coin name, description, image, and then with this slider, you can actually choose where the revenue goes. So if you want it all to go to the developer, you can. If you want it all to go to the community, you can. Or you can do whatever kind of split you want here. You can set the fee receiver to whoever you want. So currently that placeholder is just sassel.eth, but you can set it to whoever you want to. You can even create a coin and then say, okay, well, I don't want to get any fees from this. I just want the fees to go to someone else. And you can set their address here and they would get all the fees from it. So it's a bit of a different way, or I think it's like, it's in similar spirit to like sending the coin to someone. Like, you know how people send these meme coins to Vitalik, and he just like either has them sitting in his own address or he sells them sometimes and donates the profits. Instead of doing that, you would send the fees, which are in ETH, you would send them to this recipient instead of the token itself here. And you can also add socials here, of course, as well as add a buyback here as well, which is very, very cool. Then connect your wallet and away you go. You pretty much launched your meme coin. So yeah, I know I've been pretty critical of meme coins in the past in terms of like how extractive they can be, and they are, you know, overall very extractive and can be quite net negative. But I think when it comes to things like this, you know, Flaunch, for example, the reason why I wanted to highlight it was because one, it's using Uniswap v4 in the background, which I think is pretty cool. Two, if people are going to launch meme coins anyway, it doesn't matter what you think of them. They have a product market fit, obviously. People love to gamble. They love to speculate on things. So can we actually do things better, right? Can we actually launch better meme coins or have meme coins that are fairer? And I actually think with Flaunch, we can, right? Because of the fact that you get this kind of split here, and you've also got a way to do like buybacks for the coin and stuff like that. So yeah, I hope this actually gets used for just tokens in like that are tied to projects as well, potentially, not just, you know, pure meme coins. But I figured it was worth highlighting for you guys because I know a lot of you guys like this kind of stuff and you play in this kind of stuff. And as I said, it's built on Uniswap v4, so it's actually a really good showcase of some of the features that Uniswap v4 enables here. So you can go check that out for yourself. I'll link it in the YouTube description below for you to do so. All right, so Lido's community staking module is now permissionless and open to everyone. So you can stake with this Lido CSM and submit your first validated key with just 2.4 ETH as a bond, but the bond drops to 1.3 ETH for validators after that, and early adoption eligible participants still enjoy a discounted bond of 1.5 ETH for their first validator. And you can go to csm.lido.fi to check this out here. Now, while Lido still has a huge market share in the staking space, I think it's like 28% still of the overall staking space, I've always said that the real kind of test of the network's decentralization, or like the real value, is having as many node operators as we can. Obviously, we don't want them underneath the same umbrella, because the Lido umbrella is still one umbrella, right? But they do have independent node operators as part of that. And for all those node operators to collude, they actually have to get together and collude. It's not like the Lido can go there and say, hey, you all need to collude. The Lido DAO can do some stuff, but over time, they're actually removing how much the Lido DAO can do as well, which is pretty cool. So yeah, it's just really great to see that with this launch of the community staking module, there's going to be more node operators on the network. That's what we want. We want more and more node operators, because that's where real decentralization comes from here, and that's where the real economic security comes from here. So if you want to become a node operator, or you already are one, you can go to the website here and sign up, or you can just connect and spin up the validators with the bonds here if you're ready to go, basically. And then you can read the Twitter thread as well for more information on this. I don't know what the current number is right now in terms of Lido node operators. I think it's gone up a lot recently because they had the CSM in like an early kind of testing phase for a while. And I'm just bringing up rated.network on my other screen here. So according to rated.network, they currently have 508 entities that are staking as part of Lido right now. So I'm assuming that like they're pretty much all independent, or at least like a lot of them are independent. I don't know about all of them. It's kind of hard to prove who's independent versus who's just changed their name, right? For example, I don't know why you would do that, but maybe it makes it look better, I guess. But then you can also see the network penetration, which is an important point here, because right now the community staking portion of it and the simple DVT module is actually a very small percentage of the overall network participation. So 36 entities, which is the original 36 Lido node operators, still account for 27.25% of all of the Lido stake, of all of the network stake. Lido's current total penetration is 27.96%. So that delta between 0.25 and 0.96, that's the percentage that is currently, being run by about 257 entities and 56 DVT clusters here. So that number is what counts. It's not just the unique node operators in Lido's case, it's where the stake actually lies. And right now, it still lies mostly with those 36 entities. So we obviously hope to see that move over time. And that's where you get the real decentralization from there. But anyway, as I said, you can go check this out for yourself. I'll link it in the YouTube description below for you to do so. All right, something that I forgot to mention the other day that was kind of a shield to me on crypto Twitter here was that Safe is running an agent-a-thon, which is basically an AI hackathon here, and this is all online, so you can actually go sign up at agentathon.ai. I think signups are still open because this hackathon is taking place from Feb 3rd to Feb 17th. Yeah, you can still register here, and this is obviously all about AI and building AI with Safe, especially, and building it on top of Ethereum. And there's over $200,000 of prizes up for grabs, and it's judged by the top leaders in crypto and AI here. And you can see the hackathon partners include all of our favorite names, from Optimism to Arbitrum to Gnosis to these other AI players or newer AI players that you can see on the list here, like Fraser, for example. And then you can scroll down and see who the judges are. So it's funny, I saw Eric Connor was one of the judges here because he's been very big on AI. So he's still out there, guys. He's still in the crypto sphere, even though he kind of gave up his .eth recently. But I think he'll be back there. But he's among a bunch of other people who are part of this here. So if you are interested and you're a developer and you want to get involved with this, you can go check this out. I'll link it in the YouTube description below for you to do so. All right, so I have a bunch of time here left on today's episode, and I guess it's probably prudent to spend a lot of it talking about the state of the market, I guess. And as I said, I haven't talked about this in quite a while because I didn't think it was relevant, but over the weekend, it definitely became relevant. Now, I made this meme on Twitter, and it kind of went pretty far. If you can see it on my screen. If you're listening on the podcast, you can go check it out. I'll link it in the description. But obviously, we all know what happened, right? The markets had a pretty big sell-off of the kind of reaction that Trump was putting these massive tariffs on Canada, Mexico, and China. Now, I think that the market already had started selling off over that AI stuff, right? Like the DeepSeek AI thing that came out of China, and everyone started like getting like scared because they're like, oh, did we overinvest in AI? Was AI a bubble? And then you saw Nvidia crash or come down in price a lot, and then the stock market was a little bit wobbly there, and then that bled over into crypto, and then we had the tariff stuff happen on the weekend, which led to a pretty substantial dump. I mean, you guys probably all know this by now, but ETH went from, what is it, $3,400 like 4 days ago, and it went to like 2150, and it didn't stay there for very long. It kind of bottomed there and is up at about 2600 right now. But like the rest of the market sold off as well. BTC held quite steady, but that's kind of normal for BTC at this point in time. But yeah, the whole market kind of sold off here. ETH got hit especially hard. Like, it's kind of funny. I saw ETH, like I was awake when this was happening, and I saw ETH go down like just crazy, and I was like, what the hell is happening here? And there was a lot of liquidations, of course. A lot of things blew up, but I'm kind of wondering, is there a big player that blew up on ETH that we're going to find out about? Because it was a pretty brutal and fast crash, like one of the biggest that we've seen. I would say obviously the COVID dump was still bigger, but the vibes are very similar in that, and then the vibes were also similar to May 2022. If anyone remembers that, when the Terra crash was happening, it just felt like it was a bottomless pit, right? It's like, when is this going to stop? And those things usually happen, or pretty much like do happen because of liquidation cascades. So essentially what happens is that people keep getting liquidated, and then that puts more buy pressure on the market, more sell pressure on the market, and then that cascades, and it leads to more people getting liquidated, and then more ETH gets put on the market, and so on and so forth, right? That's what, and then people clue into this, market makers clue into this, traders clue into this, and they're like, well, I'm not going to bid this thing that's got like all this supply coming because people are getting liquidated. I'm going to wait until the dust settles, and then maybe I'll buy, right? And that's what happened basically with ETH. It's what happened with other assets, of course, but ETH being as big as it is, a lot of ETH is used on chain for leverage, obviously, with things like liquid staking as well, and liquid restaking tokens. That led to an outsized effect on ETH here. And I think on top of that as well, there was just like, I guess a negative sentiment around ETH still too, because I guess like the ETH BTC ratio had been going down. So it was just like a compounding of things that ended up happening here. Now, I will say this is what makes like investing in just generally quite hard, because, for example, like the Trump tariff thing, that's completely out of any of our control. Like, we have absolutely no control over that at all. Like, I mean, in the US, the most control that you have is voting, and like you get one vote. Like, outside of that, if as a normal person, you have no control. If you're rich, maybe you have some level of control because you can like bribe your way into positions of influence, or sorry, I should say lobby your way in to positions of influence. But generally, like as an everyday person, you are at the mercy of these like higher powers, so to speak. And especially if you are not in the US and you live somewhere else. Like, I am far away from the US. I'm in Australia. I'm not a US citizen or anything. So I have absolutely zero control over this. The only thing that I have control over is my exposure to the market. But even then, it's hard because, like, let's just say you're like, okay, well, I think these tariffs, like last week, let's just say you were thinking, okay, I think these tariffs are going to be really bad. I'm going to sell everything. And that was the right decision at the time. You're like, and right now you're feeling pretty good about yourself. You're like, oh, that was a good decision at the time. I sold everything. But then, like, you're sitting in cash, and maybe you've got it in a bank account earning some kind of interest on it, or you've bought some like treasuries and earning a yield there. But then after a little while, like, the bleeding stops, things stop going down, and things start going up again. So you think to yourself, okay, well, what do I do with this money? Do I redeploy some now? Do I think it's going to keep going up, or do I think like this bull market cycle is over? Do I keep the money out, sort of thing? So it's always this constant game of what to do, and this constant game of uncertainty, especially when you have stuff like the tariffs, which people have no idea kind of what's going on. There's different explanations for what's happening. No one really knows. We have this meeting today, apparently, that Trump's going to have that may or may not have a deal attached to it, and maybe the tariffs don't happen after all because they don't go in place until Tuesday, and then throw in the fact that it was a weekend as well, and weekend the markets aren't open like the traditional markets. The only market open is crypto, and crypto loves to front run these things and loves to trade off fear, like it really does, and it's obviously very volatile as an asset class. But that's what makes like investing so difficult, is that like you can control your exposure to the market, but then your exposure to the market is dictated by everything else happening around it. It's not like you buying means that the price is going to go up, or you selling means the price is going to keep going down. No, like if you buy, there's no guarantee anything's going to happen. Like especially even if you're buying with size, like even if you're buying ETH with millions and millions of dollars, you're not going to move ETH. Like look at Saylor, for example. He buys with billions and billions of dollars. He has an effect on BTC over the longer term, but short term definitely not. So even at that kind of level, you have to think like that. So if you're just kind of trying to buy and sell and play the markets, it's extremely difficult. But even as a long-term investor, it can be difficult because you're like, well, I think I'm over-invested right now, so I'm going to kind of sell some. But then if things start going up again, you get some FOMO. You're like, oh, I need to get back in, or I need to do this, I need to do that. So it's very difficult, guys. And I think that, and I've said this before on the Refuel a lot of times, I think that crypto had lulled people into such a false sense of security about how relatively easy investing is, because for the previous 3 cycles, it had been quite easy, or I guess like you could say 4 cycles, but really it's 3, where essentially what you would do is you'd be like, okay, well, I'm going to buy crypto and then I'm going to wait. And then at during this 4-year cycle, it's going to go up. It's going to go up a lot. BTC will go up first, then ETH will go up, and then the alts will go up, and then that's when I'll cash out. But if you actually see what happened this cycle, that didn't really happen at all. What you had that happened this cycle, and this goes back to what I said a long time ago, where I said I think the 4-year cycle is dead, and I think that's more true than ever before now, but I'll get to that. But if you actually look what happened this cycle, BTC went up a lot. ETH tried to follow, but didn't really get there, and went to 4K. It never broke through 4K, at least not yet. It hasn't, and we don't even know if this is the end of the cycle or not right now. Like that again, that's another thing that's hard to tell, especially when there's these kind of global trade wars going on. But yeah, ETH tried to follow, and then like you had this sector that was very crypto native of meme coins that did relatively well. I guess, like, I think like net, most people lost money on them, but they were still going up. And then you had obviously Solana go up a lot as well because they captured the meme coin meta. Like it happened on Solana, so Sol went up, natural, right? But outside of that, like the cycle didn't play out like it had previous cycles. BTC kept going up, ETH BTC kept going down. ETH couldn't keep up with it. BTC went into price discovery, went to new all-time highs. ETH couldn't keep up with it, which means the alts couldn't keep up with it either, because everyone was like, oh shit, if ETH isn't going up, then like why would I bid the alts? Like they're not going to go up either. And it becomes this self-fulfilling thing. And Bitcoin dominance is at its highest level that it's been in years as well because of this. So the cycle has completely not played out like last time, except I guess maybe for BTC. But even that, like if you actually look at BTC, it still struggled a lot around 100K. It went to 70K last cycle, and that was in 2021, and it got to like 110K, I think. That's not much above its last all-time high. So I think even if you were betting on BTC going to like 200-300K, you've been disappointed so far. And I'm not saying the cycle's over or anything like that. I've got no idea. But I'm trying to, I guess, put the point across is that this cycle has been very different. And I would argue that the last cycle was also very different, but we were saved by the COVID stimulus, the money printing. But this cycle has been distinctly different, where I do truly think the 4-year cycle, and I thought this before, but I think it's hard to deny now that the 4-year cycle as we know it within crypto is dead. It's not going to play out like that anymore. And I don't know what kind of cycles we're in. Are we just out of the cycles? I don't know what assets people are going to buy versus others. Like, what do you even buy anymore? Like, if so, like the thing is, a lot of these assets are fundamentally worthless. And the only reason why they were getting bids was because people were expecting this cycle to happen again. And the smarter people would buy, and then they'd sell to all of the retail that came. But retail didn't really come in big way this cycle. They did come a little bit into meme coins, just to some extent, but nowhere near what they did in 2021, and definitely not like what happened in 2017 either. So again, it's been a very different cycle, a very weird cycle, and this has thrown everyone off guard. This has thrown everyone into disarray. They're like, what do I do? Like, do I sell now? Do I sell on the bounce? Like, what's going to happen with the prices? Do I just buy BTC from now on and forget about everything else? Like, what's going to happen here? Even long-term investors I'm talking to, they're thinking like this because they also counted on the 4-year cycle. And again, that's why I think that people thought it was easy easy to invest in crypto, and they became very entitled about it because they believed that the cycles would play out the same. And in hindsight, that was a really dumb way to look at it, because if everyone believes that the cycle is going to play out the same way again, then it's not going to play out the same way again, because everyone's playing it the same way. Everyone's saying, okay, well, I'm just going to buy this, I'm going to buy that, and then I'm going to sell. But then people start front running each other with the sells. They're like, oh, this pumped a lot already. And it pumped a lot, like, relative to where it was, not relative to what it kind of did last cycle or what things did last cycle. I'm going to sell now because I'm smarter than everyone else. But if everyone else is doing that, then it just leads to a lot of extraction, and it just leads to this constant kind of cycle of things go up, all the smart people take profits, and things go down, things go up again, but they don't go up as high as they were, right? And then the people take profits again, and so on and so forth. And you have this kind of, like, I think they call it the euthanasia roller coaster. You can Google that. It's a pretty apt description of a lot of these assets out there. So yeah, that's my general view on all of that right now. In terms of, like, ETH itself, I mean, I was saying this in the Daily Gwei Discord channel today. I don't know, guys. Like, honestly, if I'm being totally honest with you, and I try to be as honest as I can on the show, but I'll be even more honest than I usually am today. I did not expect ETH to perform this poorly, especially given that we have delivered on all the major roadmap items. Yes, there are issues with Ethereum, but they're being fixed. The growth of Ethereum is amazing. Is going amazingly. The L2s are on fire. We have the ETFs. We have TradFi getting involved. We have so many good things going for ETH. I just have no explanation at this point for why ETH is doing that. And I'll admit that, like, myself as well, like, I'm affected by these swings too. Like, you guys know, I have a lot of my net worth in ETH. Like, I truly believe in Ethereum and ETH, and I'm a long-term investor here. But that doesn't mean that I don't react to the fact that, you know, ETH was 3,400 4 days ago. It went to 2,100. Like, my net worth went with that, right? Like, I'm not immune to that. I'm not hedging my positions. I'm not trading in and out of things. I'm literally stacking ETH and holding it. And of course, it affects me negatively, both, like, my mood, my mental state, and also, like, kind of questioning my decisions sometimes about, like, what I should be doing in these markets. Maybe not with ETH. Like, I haven't lost any kind of bullishness about ETH, but it's kind of this thing of, I don't know, everyone seems to think I'm like this hyper stoic guy who isn't affected by anything that happens in the markets. Of course I am. Everyone is. No one is stoic about the markets. There's no way you can be, given how absolutely crazy these markets are. But what I do try to focus on always is the longer term. I really do try to focus on the fundamentals. And I know that this market generally doesn't like to focus on the fundamentals, but I do think as Ethereum becomes more intertwined with the TradFi ecosystem, more intertwined with the serious parts of finance, ETH as an asset and Ethereum as a network will be treated based on its fundamentals a lot more. And I think that Ethereum's fundamentals are as strong as ever. They're only going to get stronger over time. I do think that it's been nice to see that we've all united on this based native roll-up approach to the L2s, because that's what's going to fix a lot of those UX issues that we have with them, like fragmentation, for example. So I'm really, really bullish on that. But these are not overnight fixes. They're long-term things. And in terms of, like, ETH value accrual, that's also a longer-term thing. As I've said before, we basically said, okay, well, we're going to give up a bunch of fee revenue to scale Ethereum, because if we don't, people will just go somewhere else. And I think people sometimes focus too much on the, I guess, like, quote unquote loss of fee revenue. They're like, oh, ETH was generating so many fees and now they're not. It's like, well, yeah, I mean, there's a bunch of reasons for that. One reason was that MEV on Ethereum, a lot of the MEV got kind of like internalized by the apps themselves and was taken off of Ethereum, which means a lot of fee revenue was taken off. But we also did blobs, which collapsed the fees for L2s. And the reason we did this is because we want to scale for users, not just for kind of whales who, like, for example, if we didn't scale Ethereum for end users, these users would just go to other chains, right? And that's a bigger loss for Ethereum than them going to the L2s and the L2s paying less fees than otherwise, because there's no way we were going to onboard the world to Ethereum mainnet when the fees were like $50 on average. That just wasn't happening. So yes, for a limited period of time, the high fee, those high fees may have been bullish for ETH as an asset because it was Ethereum generating revenue, but over the longer term, it ends up being bearish. So obviously we want to generate a lot of revenue for Ethereum, but we want end user fees to stay low. We want users to get a good experience. We want them to be able to get their transactions included, not have like constantly dropping transactions. And really, we don't even have almost all of the world onboarded yet. So we still have so much further to go here, guys, in terms of Ethereum and ETH. But the problem is that the market does not trade over 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 the long term on these things. The market doesn't see this, and the market tends to, especially in times like this where it's trading around global macro events, there's no signal in that, really. You can't really judge ETH based on that, I think. And then going forward, I guess, like, over the next couple of years, or the next few years, the game really is scaling, meeting user demand, and making sure that Ethereum can service as many users as possible, and keeping that market share that we have, and growing that market share that we have, not just with regular users, but also with like TradFi institutions, making sure that they know that they can customize and build their own chains on Ethereum as L2s. They can tokenize their stuff on Ethereum. All the infrastructure's there. It's the best solution for their needs, but it requires advocacy as well. And that's why I'm really bullish about things like Etherealize, for example. So yeah, long term, I mean, I don't think anything's changed here, but obviously, the last few days has been quite brutal in the markets. It's out of our control completely. The best you can do is protect yourself by making sure that you're not too invested in the market, not too over invested in the market, which is always difficult to do. I completely understand that, but I have no crystal ball. No one does. We have no idea what's going to happen from here, but I'm always long-term bullish on Ethereum and ETH. That hasn't changed at all. So hopefully that can give you some context around how I think about these things. But I think that's it for today's episode. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all on Wednesday. Thanks, everyone.